week, same problems, guys. Let's move to the next slide, John, please. Reset here. S&P, well, it was working on its fourth straight down week. We'll see how the day ends. Fourth straight down week of 2023, possibly. 10-year year rolled 40 basis points this February, and that's been, the crux of the week. There really hasn't been anything else besides yields wrecking the party. That 2 and 10 spread has been inverted for 7 consecutive months. I think you guys both said like this thing's probably going to be inverted for nearly a year and a half, right? Something like that.
That's we got whacked on it this week. It pissed me off. This was a bad week for the yield curve.
This extreme.
Yeah, this is a bad week for the yield curve. I think it's going against us today as well.
Yeah, it's
Yeah,
it's not bad. Story. And the biggest change, I think, in the last several days is now you're seeing this at least a 50% chance of a 25 basis point hike at the next 3 meetings for March, June, and July. So that's really been the big change in the last several days. Bitcoin has remained resilient in the face of these regulatory challenges. More talk of regulatory scrutiny and whatnot. We saw what happened with Silvergate this week. Got a little slide on that in a second. We'll talk more on it. And then VIX Index closed below 20 for the first time in 2 weeks. So while we've had, we're on the verge of another down week. We'll see again how the week ends. It wasn't particularly volatile, I would say, and volatility actually kind of came in this week.
Yeah, and surprisingly, there was some pretty good volume this week too, especially in the futures. Options was okay too.
Yeah. Let's move to the next slide. I mean, here's the story, man. 10, 20, and 30-year yields now back above 4%. Obviously, you see I don't have the chart here, sorry, but 10s, 20s, and 30s are all bunched up there, and the one that you see poking out, obviously, is the 2s. Fed fund swaps now show a terminal Fed rate of 5.5% by September. And here's the thing. It's not even guaranteed. It could continue to go. We really don't know, right? I guess I got to ask you guys, when's the last time you remember a rate environment like this?
2000. Early 2000s, probably.
Yeah. I mean, you just kind of got to hold on to the roller coaster, right?
Well,
wait a minute. The past wasn't the norm.
Yeah.
No, you're right. You're right. I just mean,
it might be the norm for somebody who's just getting involved in borrowing money, house, cars, or whatever. But it has not been the norm.
How do you mean that exactly? I mean, we never had 0% interest rates or thereabout. You know what I mean? Like it wasn't the norm. I mean, when I first was borrowing money, it was 20%, 20% on a home loan. Mm-hmm. So you say ride out the wave. I mean, it all depends on where you started. Yeah. Well, I guess when saying that we're seeing all this stuff about terminal rates. And so I think in a lot of people's mind, including mine at times, once we get to 5.5, things will be set. But we really don't have something that heads us to double digit rates. We could end up at 10. We really don't know.
That's true.
So I guess that's the thing. I'm trying to get some insight as to what happens in those time periods. What's your mindset as rates keep going? Was there a time back when it was 20? Did you think, when it was 18, you figured that was the top? You know what I mean? Like, this is new, honestly, for me to some degree to see rates this high. And in the time period, I mean, even though I was around then, I wasn't paying attention to rates back then.
Sure.
My time period of paying attention to rates is really like the beginning of 2000s, although even then I was in grad school. This is just me personally. Mm-hmm. When it comes to trading, it's 2006, and that was a higher rate environment. I think we were somewhere around 4% at the time. Mm-hmm. And then in my trading career, we started dropping them, like 07, during 08, things like that. So try to get an insight on what do you do when you're in an environment when the rates keep going up trading wise? What's your thought process?
I mean, I don't think it really affects our time frame.
Yeah, I don't think so either.
Days, unless you're putting on a bond trade. Obviously, we've traded the yield curve and gotten it wrong for the last year. So I guess with that, we don't do it very well.
Yeah, and I don't think it doesn't impact it
doesn't affect our trading.
Not at all.
In a short time frame.
Yeah. Let's move to the next.
What happens if Silvergate fails? I mean, I don't believe that there's this contagion situation, right? It's more of a niche situation, right? It's supposed to be a crypto focused bank and people have been interested from that standpoint, but it doesn't seem like a watershed moment at all. But it's interesting to keep watching what's happening with that situation more recently. What do you think? What are your thoughts?
We traded a little bit yesterday. I hope they don't fail. Just because I can't imagine that Silvergate failing is going to be very good for the crypto space. But other than that, I mean, it's a $5 stock now. I don't know. I mean, it's cheap risk reward. I like it to the upside.
Right.
That was kind of what the blurb was about at the beginning. I mean, I feel like, you can take your cues from Bitcoin to some degree. I mean, given the move that Silvergate did the other day, Bitcoin didn't seem to be that phased about it versus the FTX situation.
No, not until this morning. This is the first time Bitcoin got phased was this morning. It got spooked a little bit and dropped, $1,200, whatever.
Mm-hmm. Mm-hmm. Oh, it did? I didn't even notice that.
It's 22,400.
It dropped. It's down $1,140 right now. So they got a little scared today.
Interesting. Let's move ahead to the next. Well, I didn't really even plan it like this, but I guess I just thought this was interesting. Major corporate collapses since 1987. This is a chart, basically speaking of FTX that's in here, but some of the big companies, AIG, WorldCom, Enron, FTX, which was just under 50 billion, about 40 and change. Washington Mutual, obviously a lot of the banks in 2008, Lehman, of course. Texaco. I know you guys remember Texaco, right?
Of course, Texaco. You kidding me? I had one of their patches on my jean jacket.
That says it all right there. That whole thing says it all. This Banco Spirito, I don't remember. Canadian friend, sorry, I don't really remember Bre-X. I'm sure you probably do, but any Matt will remember. Refco, of course. Polypec, I don't know that one.
I don't remember Polypec either.
And then Kmart was relatively small. Kmart. Good old Kmart.
Love a little Kmart.
Yeah. Big corporate collapses, though. These are it, man. So that shows you where FTX lies among those in the last several years.
We managed money. Scott and I managed money once for Refco.
How'd that go?
It went good, but then they went out of business.
They called it the Sosnoff. They got Sosnoff.
No. They didn't get. They owed us money.
I'm teasing you.
No, I know. I'm just saying they actually owed us money when they went under.
What were they again?
Refco was a commodity.
They were on more.
A commodity broker, right?
Yeah, they were a commodity broker.
That's right. SPX forward curve. So this is kind of what we got going on, man. Which is not a whole lot, but you got the. Hey, speaking of, did you guys know why the Fed jobs report was not this Friday and next Friday? I honestly don't have a reason. I don't remember. I don't know why.
I don't either. I think it maybe because not a full week, but I don't think that's a good reason.
We're gonna have to ask Chris Vecchio.
I didn't ask him. It's funny you say that. I should have asked him when I was on with him on Thursday. I thought about, he probably knows. He probably has a reason. Because at first I thought it was a 4-week thing.
Right.
I thought it had something to do with Easter. And I don't think it's either one of those. It's interesting.
When's Easter?
Easter is the 7th. April 7th is Good Friday.
Right.
Ooh.
So that explanation almost made sense, but it's still a 5-week cycle. These things are usually on a 4-week cycle. It's kind of weird. I really couldn't figure it out.
I can't either.
I love Easter. It's my favorite of the Goy holidays.
Like that one? Yeah. What's great about it? What's great about Easter?
Ham.
He likes ham.
I like ham.
There's a whole lot going wrong on this sentence right now. Okay, it's just a whole lot going.
Tony, did you guys specifically go out and buy Easter clothes when you were a kid?
When you say you guys, who
I mean, like you and your family,
When you say you guys,
his whole name it's the right
You're doing
statement.
this to me right now.
It's the right statement, Jamal. His whole neighborhood would go out and buy Easter clothes.
I assume, right? I assume, right?
Of course.
Okay, because see, all the Catholic people on our block, who were all black and from the islands, they all went out and bought Easter clothes. Me and my brother were the ones who didn't do it. It was the funniest thing. And we used to be like, Easter clothes? It was the funniest thing.
No. The Batistas would go out there. They buy a little.
I get my suit with my platform shoes.
Yeah, Tony would get a suit.
Proud to say it.
A little tuxedo, because he was one of those like 8-year-olds in a tuxedo, and
yeah, I can see that
for sure.
With the bow tie.
Yeah, and then they go to Easter brunch at the pork store. I know the whole rap.
You've done your homework, Tom. You've done your homework on all this.
Evidently, he has.
Fed jobs report. Did I say Fed jobs report? A Feb jobs report is what I meant to say. Coming up next week, CPI. Not long after, which honestly I think those are kind of done. To be honest with you, we'll see though. March expiration, and then the next Fed meeting. So these are pretty much the few bumps, and you can see when we've looked at these in the past, you'd see some real noticeable bumps. These aren't, I wouldn't necessarily call noticeable. We're all sitting around 20. When you look at the whole complex of what's in SPX and or SPY, over the next several, you look over there to the right column, you see IVX, you'll see they're all pretty low, 17, 17, 18, 19.
Low.
So not a whole lot of expected volatility out there for the next several weeks. Let's move ahead one slide. Snapchat is hopping aboard the Chat GPT train. I think they're missing out on actually calling it Snapchat GPT. Don't worry, you can steal that anytime you want. They're looking to get a little bump from that. So they announced that this week. Tesla, they kind of missed the slam dunk, man. They didn't talk about, in their investor day, they didn't talk about a cheaper car. There were a lot of people were wondering if they're going to mention some inroads on the $25,000 car, which really seems cheap right now compared to what
it ain't gonna be one. That's why they didn't mention it.
Exactly why, probably. You're right. Yeah, Elon ain't no dummy.
Yeah.
What could go wrong here? Better.com is allowing Amazon employees to use stock as collateral for their homes. What about that? What do you think?
That's smart by Better.com.
You like that?
Yeah.
Okay. Why you like that?
Because I think it's a smart move. I mean, if I was trying to build a business like Better.com is, and I'd let Amazon employees use stock as collateral for sure.
These are the dudes who fired like 100 people over Zoom like last year.
If the FINRA would allow us, we'd let Amazon employees use stock as collateral too.
Right. Remember, it's not going to be 1-to-1. It's not going to be 1-to-1.
Yeah, it's not 1-to-1. I let them use all the collateral they want using Amazon stock, except it's probably not it's probably not registered stock yet. So it's like restricted. So that's what I don't understand how they're going to do it, but whatever.
Yeah, I think they're going to vary their rates anywhere between 25 and 250 basis points, depending on
depending on when you become vested and all this other stuff. Yeah, it's a little complex, but I'm all for it.
It's interesting. Yeah, it's interesting. Meta and Snap would possibly benefit if there's a ban in TikTok in the U.S. Who would not benefit is Tom Sosnoff. He would be deeply heartbroken.
I just wouldn't watch. I'm not going to use Facebook or Snap to replace TikTok.
As you shouldn't. Yeah, those two things suck.
Yeah, you'll be watching nothing soon.
They do. They really do suck. They're horrible.
No, yeah. Instagram? What about Instagram? You mess around on Instagram a little bit.
I mean, occasionally, like I creep on Instagram, but I don't really like Instagram. Too many.
It's really interesting to see how all of these platforms have really changed and trying to go after the short video, right? Like it's a trip. Yeah. I mean, you see Instagram.
You just told me that yesterday you don't creep. Now you say you creep.
She's not on right now.
Story straight.
But I didn't know the term was called creeping when all you do.
Okay.
I just don't post anything.
You didn't know, but you got a murdered out vehicle. Jamal, I gotta go so we can catch the opening bell. I appreciate your time. His story falls apart if you listen to it ever so long. My Taiwanese source, Stuart, reminded me that jobless claims comes after a full week, then the first Friday, so you'll get it next week. We didn't have a full week this week. We'll take a quick 90-second break. You got more Tasty Live after this opening bell.